Which is better, stocks or real estate? Well, by the end of this video, I'm going to answer that for you. But before we even get there, what is real estate? Is real estate the land, or is it the business on top of the land? Or is it the value someone pays for the land and the title to hold that land for the next few decades? What is real estate? And then what is stocks? Is it the share that you're holding, or is it the company and the value of the company itself in the marketplace? Or can you use leverage and increase how much profit you can make in the same amount of time, or potentially lose? Well, if we were going by strict sense of the word, a stock, when you buy it, it goes up in value over the next 10 years. Then you sell it for a profit. Same thing with real estate. We're going to compare apples to apples. We're going to keep it simple. If you're buying real estate and you're holding it for 10, 15, 20 years, then you're going to sell it and make a profit. Except it's not that simple. So then, which is better? Here's what we're going to do. We're going to put two things on the scale, right? Over here we have stocks, over here we have real estate, and we'll see which one wins in the end with more points. Make sense? Okay, cool. So the first thing is that for cash flow, which is how we gain financial independence in the first place, real estate knocks stocks out the park. The reason why is that real estate is the best leverage that you can have, because real estate is a physical asset. Now, you may be saying, well, dividend stocks would be able to give me cash flow, and you're not wrong. However, let's say I wanted to get around $40,000 a year in dividend income. Following the 4% rule, I would have to invest $1 million to get $40,000 a year in passive income from dividend stocks. $40,000 a year, I would have to have $1 million in cash to get that. Now, in real estate, let's flip the switch. If I had $40,000, I could control an asset that is worth $1 million, the opposite. That is worth $1 million, that could potentially cash flow 5% a year. So that if that $1 million asset is cash flowing 5% a year, then that's $40,000. So then $40,000 got me 4%. That's 100% cash on cash return in the first year. Now, for cash flow, that would be better. But that's 1 point for cash flow. What about growth? Now, in terms of growth, over the last 2 decades, stocks have outperformed real estate by a huge margin. Now, this doesn't mean that real estate didn't perform, but real estate tends to perform between 3 to 5% a year in terms of growth. Versus in 2024 alone, the stock market did around 23% in 1 year, which means that stocks are outpacing real estate by a pretty large margin. So in terms of growth, if you're having capital, if you had the same amount of capital invested in stocks versus real estate, your stocks would have gone up pretty substantially more. However, if we were to go back and talk about leverage, the point of leverage is that you can take $40,000, borrow, get $1 million asset, and then earn $1 million instead of $40,000. Stocks don't allow you to do that as easily. Yes, you can use margin, but it's far more risky, which is why real estate won point number 1. However, point number 2, stocks take. Stocks grow faster. So then, let's move on to the next thing, which is safer. Okay, traditionally, real estate has been safer than stocks. Companies go bad all the time. But there's a reason why 90% of millionaires own real estate. Because that's a good place to store your money. It keeps up with inflation. Rents tend to keep up with inflation. So that even if companies perform badly, rents are still being paid. Rents are still going up, which is good. But does it always mean that rents and real estate is a safer investment than stocks? Not necessarily. But it is a pretty safe investment. So if you were to compare stocks versus real estate would probably be the safer one. So then again, real estate is up 2 points. Stocks are only up 1. So real estate is safer and does have better cash flow, but stocks grow faster. We have one more category to look at. Actually, I'll give you 2 more categories that you can take home. 2 more categories. So between stocks and real estate, which one is easier to understand? This is very cool. So think about this. The numbers for real estate are not very hard. There may be 2 or 3 formulas that you might want to learn, but really it's addition and subtraction. How much does it cost to hold a property versus how much you're going to make on it? And if you can do that math, it's very easy. And there's really only so many properties to look at. Bring that over to stocks. How many companies are there in the S&P 500? Thousands. Which means that knowing which companies to buy, knowing which companies are going to boom in 20 years, that's some pretty complicated math. In fact, they use supercomputers to analyze stock trends. That might not be as easy for everybody, which is why there's education when it comes to stocks. But real estate is a lot simpler to understand, maybe deceptively so, because even though it's simple, doesn't mean it's easy. But in terms of beginner's approach, real estate does take another lead, which is great. So we're 3-1. Now, with that said, it seems like real estate is going to take this home. But for the last one, winner takes all. Which one is the better asset? If you were to hold for 40 years, which one would perform better? So we're going to answer this question in 2 ways. One, 90% of traders lose money in the first 5 years. So if you're trading stocks, you're going to lose all your money. That's not true. But you'll likely lose all your money. Maybe it's not as much as 90% of traders, but let's say it's 80, let's say it's 70. The majority of traders are losing money in the first 5 years. Versus the success rate in 5 years for real estate is 90%. That's a really good asset to have. So in the case of 40 years, if you can make it past those 5 years and then wait another 35 years, real estate is actually going to give you pretty good returns. See, in the course of 5 years, real estate definitely wins. In the course of 40 years, there's a reason why most of the millionaires in the United States, the biggest asset that they have is the home that they live in. And it makes a huge difference. So the faster that you can get into real estate, I'm telling you, from a perspective of waiting decades, real estate definitely takes the crown. If you like that video, there's one more here. I think you'll like it. Click to watch. I'll see you in the next one. And by the way, if you haven't subscribed already, what are you waiting for? Hello?